Warren Buffett literally told you guys the quiet part out loud on what is going to be happening, and it is a very grim warning. And most people don't even realize what's about to happen. So welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. If we take a quick look at this article from July 24th of this year, it's titled "The 7 Largest Bank Failures in US History." And what's crazy about this is 3 of them literally happened back in 2023. And we know that these were also manipulated because the FDIC, the Fed, the SEC, politicians, they were actually a part of the plan to actually cause these banks to collapse because they were crypto banks. They were supporting crypto companies and businesses, and they self-sabotaged them. And this is all a part of Operation Choke Point 2.0. But also, as we do really kind of look at the banking crisis, I warned you guys back in 2023, if you have been watching the channel, that this banking crisis is not ending. It's just beginning. And if we look at what Warren Buffett has been doing, and this has been going on for about roughly 2 months now, Warren Buffett sells $338 million of Bank of America stock as spree slows. I want to interrupt the video real quick to let you guys know that I have officially partnered up with Bybit, the 3rd largest crypto exchange out there, to offer you guys exclusive rewards and benefits when signing up with my link down in the description below. There's over $30,000 plus worth of welcome rewards that could be yours right now. All you have to do is sign up, trade, and utilize the exchange. This is one of the best exchanges out there, 24/7 support. Massive amounts of trading volume in a 24-hour period. They have access to pretty much any market that you can think of around crypto. So what are you guys waiting for? Go and sign up utilizing my link down in the description below and have a good time trading. Over here, Warren Buffett has sold about $10 billion of Bank of America stock after slashing his Apple stake by nearly 60%. Now, a lot of people have been getting concerned about this because they're saying, like, is he expecting a crash? What is going on here? Should we, be panicking? But also, even over here, we have Warren Buffett's $277 billion warning that the stock market could be headed for trouble. Now, one thing that I will say right now is that I am not an expert, but the best way that I foresee things happening is we are going to melt up initially just to melt down. This is very similar to 2008, very similar pattern as well. And as we do really think about that, trying to time this is going to be impossible. So the best way to go about this is if you have investments, when we are starting to see euphoric moves in these markets, whether it be stocks, whether it be crypto, whether it be anything, take profits on the way up. Even if we look at this article, we could see that Warren Buffett has never claimed to be able to predict what the stock market would do over the near term. In a 2008 op-ed for the New York Times, he wrote, "I can't predict the short-term movements of the stock market. I haven't the faintest idea as to whether stocks will be higher or lower a month or a year from now." However, though, as we really look at this, okay, there's a good case to be made that Buffett is telegraphing a $277 billion warning that the stock market could be headed for trouble. And this is all through his sales. If we actually look at this, right, Berkshire Hathaway, their cash and short-term investments quarterly, look at this going parabolic. This happened as well leading into 2008. After that, we start to see, a very big surge in this as well. And what I find very interesting about this is, why now? Well, it's election year. And we're coming very close to the end of the elections, right? Typically, we prop markets up leading into the elections. Then after elections, things sell off. In my opinion, I do believe that we should be looking at roughly 2025 to see a meltdown in the markets. But this is much bigger than just the markets collapsing. What we should be focused on is the banks, because the main driver of this $277 billion warning is Warren Buffett actually selling Bank of America stock. Okay. Now, recently, Bank of America did go down. Very interesting, right? It aligns perfectly with his selling. So yeah, they had a widespread outage. A few other companies were also experiencing an outage as well. But Bank of America was a bit like one of the biggest ones because this is one of the largest banks out there. A lot of people rely on Bank of America. So this was definitely a big one. But if we go back to 2023, there's actually a great post regarding the US economy and banks. There are 4,800 banks in the US, and half of them are insolvent. Their liabilities are greater than their assets, and this is still technically true even today. Add this to the banking crisis. There is a real estate crisis just around the corner, especially with commercial real estate. And yes, I do think that everyone should be focused on commercial real estate. The growth has been very slow, and it is an area where you have a lot of loans that the banks are actually holding on to. So if we start to see, the commercial real estate market really kind of start to slide heavy, then banks will also go with it. And when we really kind of look at those banks, obviously the larger banks like JP Morgan, Bank of America, Citi, Wells Fargo, they will swoop in to buy up some of those banks just like they have back in 2008. It's kind of the same narrative here as well. But a lot of people have been predicting that this is not going to be a bailout. It's actually going to be a bail-in, where they actually utilize the money that's in those banks, which is technically our money, to actually bail out these banks. But 1 trillion of loans have to be refinanced over the next 2 years, and they will be crushed by higher interest rates, all thanks to the Fed, a private cartel masquerading as a public entity. And here we could actually see the US banks are sitting on huge net losses from bonds and debt securities. And then on the last slide, we have property plunge as well. Now, building upon this, we also have an updated article from May 1st. Why hundreds of US banks may be at risk of failure. Now, this is from CNBC, which was very surprising because mainstream media technically doesn't like to cover this kind of stuff. But you could see some banks either fail or at least, dip below their minimum capital requirements. Now, this is 282 banks. Consulting firm Claris Group analyzed about 4,000 US banks and found 282 banks face the dual threat of commercial real estate loans and potential losses tied to higher interest rates. So now we can kind of see why Warren Buffett has been selling major banking stocks. And also, by the way, recently, unbooked losses at banks spike in first quarter of the year. This is a report from the summer. You could actually see that compared to 2023, guess what? Losses at banks across the country rose to $517 billion at the end of the first quarter of 2024, up from $478 billion in the end of the last quarter of 2023. So losses are still growing around banks. The big question is, what happens next? Well, I'm pretty sure that you can tell what happens next. But let's play 2 clips from Warren Buffett. The first one here is from CNBC. This is Warren Buffett on the banking crisis fallout. We're not through the bank failures. Check this out.
Are we through the banking crisis at this point?
Well, we're not through with bank failures, but we are through the depositor. The depositors haven't had a crisis. The owners of banks may have lost a hell of a lot of money. The people who bought the debt of the holding company, they may lose a lot of money. People can lose a lot of money, but the depositors aren't. And so you don't need to turn a dumb decision by managers into panicking the whole citizenry of the United States about something they don't need to be panicked about. I mean, it is really, it's like we thinking that I just don't know why you do it with people. We set up the FDIC to relieve the worry of people. And initially, it wasn't the same institution it is now.
You're saying on one hand, okay, no depositor is going to lose money. On the other hand, you're saying we're not through the bank failures.
Banks can go bust, but depositors aren't going to be hurt. I mean, banks can go bust. I mean, the Continental Illinois Bank was thought to be impregnable, back many years ago. And, the Franklin National Bank, the Bank of the Commonwealth, and sometimes they go broke because they make too many dumb loans, and sometimes it's because they mismatch.
So there you guys have it. It's going to get a lot worse for banks. Now, if we think about this, he is saying that depositors will be fine. although yes, some of them will be, the FDIC only has roughly like 180 billion in reserves versus the 17 to like 19 trillion dollars in deposits. So the FDIC will not cover everyone. They can't cover everyone unless we grossly print more money. But again, if we do that, we're going right back into the same problem, the debt crisis. We are headed towards a brick wall. I've said this so many times now. And also, there's another great clip regarding why they reduced its Apple stake. Check this out.
We always look at every stock as a business, and we have no attempt made to predict markets. We have no attempt made to pick stocks. I went through many years doing the wrong thing. I got interested in stocks very early, and I was fascinated by them. And I wasn't wasting my time because I was reading every book possible and everything else. But finally, I picked up a copy of The Intelligent Investor in Lincoln, and there was a few sentences in there that said much more eloquently than I can say it. But if you look at stocks as a business and treat the market as something that doesn't tell you, isn't there to instruct you, but it's there to serve you, you'll do a lot better over time than if you try to take charts and listen to people talk about moving averages and look at the Fed pronouncements and all of that sort of thing. And so that made a lot of sense to me then. And the way I've been allowed to deploy it, and Charlie and I talked about this, of course, constantly, it's changed over the years as the amount of capital we have and has changed and all of that. But the basic principle was laid out by Ben Graham in that book, which I picked up for a couple of dollars, and which basically said to me, you've been wasting your time now, but maybe you can use what you've learned or been reading about and put it to better use. And then Charlie came along and told me how to put it to even better use. And that's sort of the story of why we own American Express, which is a wonderful business. We own Coca-Cola, which is a wonderful business. And we own Apple, which is an even better business. And we will own, unless something really extraordinary happens, we will own Apple and American Express and Coca-Cola when Greg takes over this place. It's such a simple approach that it's almost deceptive. Most things, if you keep working harder and harder at it, you learn a little more math or you learn a little more physics. But investments, you don't really have to do that. You really have to have your mind set properly. So we will end up, unless something dramatically happens that really changes capital allocation, a strategy, and we will have Apple as our largest investment, but I don't mind at all, under current conditions, building the cash position.
So he's mentioning under current, conditions, he feels confident, allocating towards cash, which is very clear with this $277 billion in cash and short-term investment opportunities that is growing significantly from Berkshire Hathaway, because this is by far the largest cash position that they've ever had. And this has been going absolutely crazy since roughly the beginning to the end of roughly 2023. And in 2024, this has just been insane. So as we think about this, is he preparing? Is he preparing for a massive crash? Well, he said that if the ratio approaches 200%, as it did in 1999 and a part of 2000, you were playing with fire. This is a strong warning sign, essentially, because that elevated level of this ratio should have been a very strong warning sign to investors. The S&P 500 began falling in the late 2000s and ultimately plunged nearly 50%. So what is the Buffett indicator now? Well, as of September 27th, it was 197.88. Based on Buffett's message from 23 years ago, this level should serve as a very strong warning sign. Now, I do think that he's preparing a little bit too early, but hey, at least he's preparing. At least he's getting into cash reserves. I think that we have a little bit more time before we start to see that massive collapse. A lot of people are prepared on the sidelines. I mean, you have money market funds sitting at 6.46 trillion, almost 6 trillion of that is retail cash. Typically, money parked on the sidelines in money market funds is to protect capital, protect the cash, have cash on the sidelines because they are preparing for a recession. They're preparing for a crash. And also gold. Gold has doubled in the last decade, marking one of the best rallies in modern history. And typically this happens because of macroeconomic concerns. So people are definitely concerned about what's going to be happening next. I don't think that the crash happens next. I think that we melt up first, then we melt down. And I think that these are big warning signs of what's to come. And I think that Warren Buffett, selling Apple after he just told you that it's a great business. They, foresee it being one of their largest holdings. They don't want to slash it at all unless conditions change. And all of a sudden, we see their Apple stake being slashed by nearly 60%. Yeah, I think that this is a very big warning sign of what's to come. And I also think that Warren Buffett telling you, banks are going to continue to collapse it's basically him saying, hey, things are going to get a lot worse. So with that being said, if you guys did enjoy this video, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.